All right, let's talk about the world of business deals in 2025. It is a really complex landscape, stretching all the way from these massive billion-dollar private equity buyouts right down to the nitty-gritty ethics of a single handshake. So, let's dive right in.
Are you trying to make sense of the mergers and acquisitions world right now? It doesn't matter if you're an investor, an executive, or a small business owner. The ground is shifting under everyone's feet.
And we're not just talking about a little tremor here. No, this is a major shakeup. It's being driven by literally everything, from global politics and new tech to some pretty scary new legal risks. And that's exactly what we're going to tackle today, the whole spectrum. We'll start by looking at these huge private equity trends that are shaping markets around the globe. Then we're going to drill all the way down to the personal, make-or-break choices that define a successful and ethical deal, no matter the size. To really get a handle on what's going on, we have to start with that 30,000-foot view. So let's zoom way out and take a look at the high-stakes world of private equity. So after laying low for a bit, the giants of private equity are definitely on the move again. And the European market? Well, it's a perfect case study for this comeback. You want one number that proves the market is roaring back to life? Here it is, 22 billion euros. That's the absolutely massive price tag on KKR's acquisition of Netco. It's one of the biggest telecom deals in a decade, and it's a huge neon sign that the big money is officially back in the game. And look, this isn't just a one-off deal. It's part of a much bigger trend. For the first time since 2021, deal activity is up across Europe. But wow, check out the real story here. The UK and Ireland are seeing a jaw-dropping 23% surge. That tells you that even with some caution elsewhere, investors are seeing some serious opportunities over there. But here's the twist. Even though deals are getting done, the money isn't changing hands as quickly. Funds are actually holding on to their investments for longer, about 5.7 years on average now. What does that mean? Well, it tells us that things like high interest rates and general economic uncertainty are forcing investors to slow down and play the long game. And all that uncertainty, it's pushing money into very specific, very safe bets. With all the geopolitical shifts happening, including a potential Trump 2.0 administration, private equity funds are zeroing in on these strategic, resilient sectors. We're talking about things like critical infrastructure, energy, and life sciences, industries that are, a bit more bulletproof when it comes to economic mood swings. Okay, let's bring the focus in a bit. We're moving from that global 30,000-foot view of high finance right down into the boardroom, where corporate leaders are facing a whole new minefield of risks. So we've seen the big deals, but now let's talk about the people inside those skyscrapers. The pressure on directors and officers today is intense, and it's coming from every possible direction. Now, one of the biggest threats out there is something called a derivative lawsuit. So what is that? Basically, think of it this way. It's when the company's own shareholders turn around and sue the leadership team, saying that their decisions, or maybe their lack of a decision, actually hurt the company's value. It's a direct attack on the board itself. And listen, this isn't some rare, theoretical risk anymore. It is happening a lot. Just look at this stat. It is absolutely staggering. The vast majority of the biggest settlements in history have all happened within the last 5 years. For an executive, the financial and reputational stakes have just never been higher. So, what are these new minefields that leaders have to navigate? Well, the people who actually provide insurance to executives, they're watching these areas like hawks. They're asking tough questions. Is your company promising way too much about its AI? Are your ESG policies creating legal blowback? Did you fail to tell everyone about a cyber attack? Every single one of those questions could be the trigger for a massive lawsuit. All right, let's bring it in one last time. We've gone from the global PE funds to the corporate boardroom, and now we're headed to Main Street. This is where the vast majority of businesses actually operate. So what's actually selling on Main Street? This chart lays it all out pretty clearly. Construction and engineering, man, they are just dominating the scene, making up the biggest slice of the pie. These are the foundational businesses, where most of the small and medium-sized M&A deals are happening. And how about prices? What are these businesses actually selling for? Well, valuations look pretty strong. We measure this with something called a multiple, which is basically how many times their annual earnings a business sells for. And what's fascinating here is that we're seeing strength at both ends of the market. The smallest businesses are getting a solid 2.3 times their earnings, while the bigger, more established companies are getting a really strong 5.5 times multiple. It shows you there's healthy demand across the board. And this isn't just us crunching numbers in a vacuum. As Emily Bowler from the International Business Brokers Association points out, this kind of data is all about giving real business owners the tools and the knowledge they need to navigate a sale successfully. And that brings us to our final and honestly, maybe the most important part of this whole discussion. Because it doesn't matter if the deal is for billions of dollars or just a few thousand. One thing holds it all together: ethics. Look, when you go to sell a business, you're pretty much going to run into two kinds of advisors. On one side, you have the ethical professional. They're transparent about fees, they're crystal clear about their role, and they guard your confidential information like it's gold. But on the other side, you have the predatory operator. They hide costs until the last minute, they create huge conflicts by trying to represent both sides, and they can absolutely tank a deal by leaking sensitive info. The choice couldn't be more stark. So, how do you make sure you're working with one of the good ones? Well, it all comes down to their process. A true professional will define their role from day one, set up clear ways to communicate, keep meticulous records, and give you a fee model that has zero surprises. This isn't just good business, it's your safety net. Wow, okay, we've covered a ton of ground here, right? We've gone from the entire global economy all the way down to a single handshake. Now let's pull it all together into a playbook you can actually use in 2025. So, if you remember nothing else from this, remember these 4 key things for 2025. First, big money private equity is back, but they're playing a longer, more patient game. Second, the risks for executives are growing fast, with a huge focus on things like AI and ESG. Third, the Main Street market is alive and well, especially in those core sectors like construction. And finally, the big one: ethical conduct is the absolute, non-negotiable foundation for any deal to succeed. We're living in a market that's defined by these massive global shifts on one hand, and deeply personal consequences on the other. So the question for you isn't just what's happening out there anymore. It's, with everything we've talked about today, are you actually prepared to make your next move with confidence? Thanks for watching.